You are listening to chartingwealth.com for Thursday, the 28th of June, 2018. I don't know how you feel about the stock market, but I absolutely love it. I love following it every day. I love practice trading. I love real trading. I love watching the money grow, whether it's in my virtual account or in my real account. It is absolutely fascinating. It is a fun, incredibly exciting, challenging thing to do because you are matching your wits against the market, potentially millions and millions of other people, and it is just incredible. And we have a book for you. It is our book, Charting Your Way to Wealth. Those of you who've been following us for many months or many years, you know how long this book was in the creating. And we got it out several months ago. We're in the third printing right now. If you don't have a copy of it, you cannot buy it anywhere else but here at our channel. We purposefully do that. I autograph every copy. I send a personal note out that I write by hand and sign. I've done hundreds of them, thousands of them, and I am more than happy to send one out to you. All you have to do is follow the link that's in your email. You also have the link at the YouTube channel and at our website, chartingwealth.com. Wherever you are, look into the show notes. You will see a link where you can go purchase your copy of the book. It is how you help support the valuable work that we do, that we put out for free every day, all the great training. And speaking of training, I do want to encourage you to please subscribe to our daily market review. Why is that? Because at the end of June, we're going to do our quarterly review. And we're going to go over the charts and where they are. We're going to talk about how accurate our charts have been over the last 20 years for getting into and out of the market and what's actually going on and transpiring. And we're going to cover this latest purple crossover going up that we had on the quarterly chart and where things are at the end of the month. And you're only going to get that if you are a subscriber. And you get to be a subscriber by going to chartingwealth.com, putting in your first name, a full name if you so desire, and your email address. And we will then send out to you every single day the daily reviews that we provide. And of course, on Friday, we provide you with that weekly comprehensive review and forecast and all the special trainings. Also, bonus. If you've purchased our book or you purchase our book before the 15th of July, we're going to be doing a special training for you guys, and it's going to be on the secrets of short chart trading. The 2-hour chart's what we're going to focus on. It's going to be just for you guys, for no one else but the people who purchased our book. So go get one while you can. The third printing is starting to run low. Maybe we'll go into a fourth printing. I'm sure we probably will, but hey, don't wait. Go ahead and order yours today. So let's jump into these charts. What's going on? Well, the weekly charts, we see that the S&P 500 down for the day. The Q's down big, 1.36%. 20-year bonds up about 1%. Gold down about 0.5%. Let's look at the weekly chart first on the S&P 500. We see the derivative oscillator losing momentum. Looks like the price percent oscillator is getting closer and closer to crossing over, going down. Red down candle with a wick on the bottom. Price movement, of course, is broken through the weekly trend line. Did that in the past week, and the prior week rather. And we see that price movement is, of course, well below the 2-day trend line, which has, of course, crossed over going down. That happened back on the 2-day candle ending the 25th. And of course, the latest 2-day candle, an even bigger down candle than the prior one on the 25th. We see that the derivative oscillator heading down, price percent oscillator gaining downward momentum. 4-hour chart, what do we see? It's continuing to move down. We have some up movement in the morning and then down movement in the afternoon with a big wick on the top and the bottom. So it's sort of when we start seeing, when we see just solid red candles with a down wick, okay, that's strong down movement. When that starts to back off and we start seeing either spinning tops or we see wicks on the top of a red down candle, are we potentially running into some downward resistance? Well, we see that the derivative oscillator is not gaining downward momentum. In fact, it's losing it. However, the price percent oscillator really spiked down in the afternoon, but we do see a wick on top. So we'll just continue to watch things. We're not in a trade right now because, of course, the weekly's still in a confirmed up. Look like it's getting close to crossing over going down, but we won't make that call until the end of the week because you don't make a call on a candle till the candle's drawn completely. So we still have Thursday and Friday. We'll see how that works out for us, but we'll just continue to monitor and see. Maybe things will bounce off somewhere around the 270 mark and start moving up. Who knows? We'll continue to watch and wait and see. Remember, we are trend followers. We are not forecasters. We can't make the market do what we want it to do. It'll do what it wants to do, and we want to be smart about following it. What do we see going on the Qs? Somewhat similar to the NASDAQ 100, rolling over also. Not as close to crossing over in the price percent oscillator. Derivative oscillator is losing momentum on the weekly chart. Price, of course, has dropped below, has crossed through that weekly trend line as per this week. We see on the 2-day chart that we have a confirmed crossover going down, just like the prior S&P 500. On the 25th of June, we have a second strong down candle. Price percent oscillator gaining momentum, derivative oscillator heading down. We look at the 4-hour chart, a little bit up again in the morning, then rolling over, strong going down. It has a little bit of a wick on top also. Derivative oscillator losing downward momentum. Price percent oscillator is actually heading down quite strongly. So we'll keep our eye on things and just see what's happening. Price movement is well below that 2-day down trend line. Don't have a trade yet in the Qs or the S&P 500. We'll just keep our powder dry, see what develops. What's going on TLT? It crossed over going up on the weekly chart back on the 25th of June for that week, ending Friday the 25th of June. Forgive me, 25th of May. And then we saw the market bump up that next week ending the 1st of June, and then really sideways for the next week, the week ending the 8th and then the 15th of June. And then it started moving up again on the week ending the 22nd of June. And so far for this week, price movement is above the weekly trend line. Derivative oscillator gaining upward momentum. Price percent oscillator spiked up over the course of the week quite nicely, again falling in line with a weekly vertical crossover. We look at the 2-day chart. What do we see? Well, of course, it crossed over going up back on the 25th, about the same time that we saw that weekly vertical crossover occur on the weekly chart. And as we watched over the next 2 days, it popped up there at the end of May. And again, I hope I didn't just say June. It popped up over at the end of May, the last 2 days there. And then over about 8 days, sort of started moving down, bottoming out somewhere around the 13th, the 2-day candle ending the 13th, Wednesday of June. And then since then, moving up quite nicely. We see price movement is well above the 2-day trend line, and the latest candle gaining momentum on the price percent oscillator and the derivative oscillator heading up. Now, what's going on that 4-day chart? We talked about it bouncing off, and it did back on the 25th, and again, sort of slid sideways for about a day and a half, almost, well, 2 days, and then popped up strong over the course of the morning on Wednesday, and then, of course, Wednesday afternoon up quite nicely, almost 1%, 0.94%, and we'll just continue to watch. Don't know if you jumped in to trade it. Not the strongest of crossing overs going up on that 4-hour chart. You may have looked to jump in back on the 14th. That would have been in the afternoon after the crossover going up. But again, the 2-day and the weekly would have allowed you to jump into those moves, but not anything super strong there to really keep you in. But now it's finally started to trek over going up. And of course, bonds going up is what we would expect to see as we see stocks going down. Sometimes the market, at least this market, driven so much by, well, who knows what. Inflation, the Fed, the plunge protection team. We don't really know, but you know what? We can still track it, and we will try our best to do so. That's where we are on 20-year bonds. Lastly, we go to gold, down 0.57% for the day. Of course, gold crossed over going down back in mid-March. After that, went up for several weeks and really started crossing over going down in earnest back on the 27th of April and has been going down pretty much week after week since then. Had a couple